Two people can each earn $8,000 for their work and have completely different tax workflows. One may see taxes removed before the money reaches the bank. The other may receive the full $8,000 and still need to handle taxes and business costs afterwards. That is the practical difference this video will explain. What changes between properly classified W-2 employment and independent contractor work, and what people compare incorrectly. My name is Mitch Caldwell, your modern-day tax CPA, and I'm a licensed CPA here in California. This is general tax education, not individualized tax, legal, accounting, or financial advice. Worker classification and tax results depend on the actual facts, and state employment rules can differ from federal tax rules. First, W-2 and 1099 are not two labels a business can freely choose based on convenience. They generally reflect different working relationships. An employee generally receives Form W-2. A business may report non-employee compensation to an independent contractor on Form 1099 NEC, but issuing a form does not create the underlying status. For federal employment tax purposes, the IRS looks at behavioral control, financial control, and the relationship of the parties. The question is how much control and independence the real arrangement shows. A contract that calls someone an independent contractor is one fact, but it does not override the complete relationship. Just receiving a 1099 does not automatically settle the classification question either. This video focuses on the tax workflow after the worker is properly classified. If the classification itself may be wrong, that is a separate issue that deserves specific professional attention. If you want calm, plain English tax explanations without fake loopholes, subscribe to Modern Day Tax CPA. That is exactly what this channel is being built to provide. With a typical W-2 job, the employer operates much of the tax payment system before the employee receives a paycheck. The employer generally withholds federal income tax and the employee's share of Social Security and Medicare taxes. State withholding may apply as well. The employer generally pays its own share of Social Security and Medicare taxes. That employer share is not simply another line removed from the employee's net paycheck. After the year ends, Form W-2 summarizes wages and withholding. The employee uses that information when preparing their tax return. Withholding is still a pay-as-you-go estimate. A W-2 employee can owe money or receive a refund depending on the complete tax return. The important point is that payments generally occur throughout the year. With independent contractor income, the payer generally does not run payroll withholding for the contractor. The contractor may receive the full payment. That can feel like more money, but much of the visible difference is timing. The tax payment may simply not have happened yet. The contractor generally needs to track business revenue, document legitimate business expenses, and calculate net business profit. The contractor may need to plan for federal income tax and self-employment tax. Self-employment tax generally refers to Social Security and Medicare taxes for people working for themselves. It is separate from income tax. Because contractor payments often arrive without withholding, estimated tax payments or additional withholding from another job may deserve attention during the year. This is why contractor revenue and employee take-home pay are not equivalent numbers. One may be measured before taxes and business costs, while the other is measured after payroll withholding. Work-related expenses can also receive different treatment. A self-employed person may be able to deduct qualifying business expenses subject to the applicable rules and limitations. The general federal standard is that a business expense must be ordinary and necessary, common and accepted in the field, and helpful and appropriate for the business. That does not turn every personal purchase into a deduction. The expense needs a real business connection, and mixed personal and business may need to be separated. The contractor may have more opportunity to deduct legitimate expenses, but also carries the responsibility to track, classify, and support those expenses. Now, taxes are not the only difference. Employees may receive health coverage, retirement contributions, paid leave, equipment, training, or unemployment coverage through the employment relationship. Independent contractors may need to pay for insurance, their equipment, admin, downtime, and unpaid time off from the amount they charge. A higher contractor rate does not automatically mean the contractor is financially ahead. You have to compare total compensation and total costs, not just the hourly number. Okay, so imagine an employee earns $8,000 of gross wages. Payroll may remove federal withholding, Social Security tax, Medicare tax, and state withholding before the employee receives net pay. Now imagine an independent contractor invoices a client for $8,000 and receives the full payment. The contractor may still need to account for business expenses, federal taxes, state taxes, and estimated tax payments. The contractor's bank balance is not automatically spendable profit. It is business revenue first. The useful habit is to receive the payment, update the business records, update the tax plan, and only then decide what is available for owner pay. So here are the 5 common mistakes I see with this topic. Mistake 1 is comparing gross contractor revenue with employee take-home pay. Mistake 2 is assuming a company can make any worker a contractor merely by issuing a 1099. Mistake 3 is spending the full contractor payment because no tax was withheld. Mistake 4 is ignoring benefits, insurance, equipment, admin, and unpaid time. And mistake 5 is waiting until tax season to reconstruct the entire year of contractor income and expenses. The plain English answer is this. W-2 employment generally includes payroll withholding and an employer role in the Social Security and Medicare tax structure. Independent contractor work generally puts record keeping, business costs, and tax planning on the contractor. Neither form automatically tells you which arrangement is better. Compare the actual pay, benefits, costs, control, risk, and responsibilities. Next, watch the guide on how much to set aside for 1099 taxes. Receiving the full payment is useful only when you build a tax plan before tax season.